was very, very pivotal because we saw more of that divergence. More of that divergence in different dimensions at this point now. Okay, first of all, let's just take a look at Thursday, right? These are daily candles. So what happened on Thursday this week? You got the CPI print, right? And what did that print say? It said that inflation is now higher than it was a month ago, right? So where's the divergence? Look how price reacted, at least in the crypto market. Look how price reacted. You had an extremely bullish candle that day. You basically had price not really caring that much that inflation is higher this month than it was last month. That's what price is showing you. So maybe, just maybe, you're at that point where you're getting the bad news, right? You're just going to get a lot of bad news here coming up, right? And no one's really going to see how that bad news could possibly be good for asset prices other than the simple fact that asset prices are not falling any lower while we're getting bad news, right? So let's look at the stock market. How did the stock market react to such events? Well, look at that. Huge volatility on Thursday into Friday on that CPI print. You had literally the biggest green bullish daily candle you've seen on the Dow Jones Industrial Average since since a long time. Since this downtrend began, really. Like literally, do you see one? No. That's the biggest one we've seen. And also notice that it's potentially forming maybe a double bottom, potentially, right? Oh, I don't want to get too far ahead of myself here, because if I start saying that this is a double bottom, then the next thing that's going to happen is we might be setting up to launch out of here pretty freaking soon, right? And I don't want to get your hopes too far up here, but I basically don't have a choice because I just have to talk about the facts of the reality that are unfolding before our eyes. And another one of those is what the DXY did this week on that CPI print news, right? Weekly candles, okay? So that last week, huge volatility we've had the past 3 weeks in the DXY. This week, very interesting close on the weekly candle. Let's go drill down a little bit and see. I'll even look at the 4-hour candles on this, which I don't normally do on the DXY, but it's pretty interesting to see where these candles are closing, right? They're not closing above the 1.618. And I did point out last week, what is that 1.618 confluent with? Well, it's confluent with the 702 on this local structure. Interesting, right? Pretty interesting to say the least. So what could this be setting up to be right now, right here? And of course, I'm speculating. All we ever do is speculate. You can't know anything. But I would speculate that the setup we're starting to see right here is potentially the makings of an ABC correction. And we have the A leg, the B leg getting held up at that 702, which is also the 1618. And the next thing that we could probably expect to see here would be the C heart wrencher on the DXY. I mean, literally, dude, like actually get that C heart wrencher going, right? And remember, divergence, right? So if you get the C heart wrencher potentially coming up this week, that does not mean that the DXY will not rip higher. In fact, it will rip higher later, but it's all about the divergence, right? So if the DXY is continuously ripping higher, but the stock market and the crypto market is gaining strength on the DXY, well then even if the DXY rips higher over the next month, let's say, you're starting to see the relative strength of the stock market and also the crypto market against that DXY, right? So this is giving us an indication that the DXY is absolutely running out of strength because it is losing momentum against other assets, right? So if we just look at it by itself, well, we can look at it by itself and be like, well, yeah, I mean, like it's definitely coming up resistance. Oh, for sure. But if we zoom way out really quickly here, we can see that this is a very strong asset. Just on the trend alone, we can see it's a very strong asset. But if we put that asset against other assets, crypto and stocks, we can see that relative to the other assets, it is losing strength. Now, one thing I pointed out to my good friend Anthony this past week was that the DXY is really just the VIX, right? The VIX and the DXY are essentially the same thing, right? The volatility index, right? So the DXY kind of tells us if people are fearful or if people are greedy, right? The DXY is pumping up really, really aggressively, then people are fearful. If it's dumping, people are greedy. That's exactly what the VIX is. So what's really interesting here is the VIX and the DXY are starting to line up here, and they're both kind of coming up against major resistance. Now, the VIX works a little bit differently than the DXY does because it trades on a very specific range, basically, $1 to $100. The VIX doesn't break above $100, right? So it's sort of a unique asset. But if we drill down on the VIX here really quickly and take a look on the 4-hour chart, we can sort of see the same kind of relative setup happening on the VIX that's happening on the DXY. Basically a double top, something like this, right? This is potentially the makings of a double top. Now, the DXY is not exactly a double top. It's just doing a 702 retracement, which could be the makings of an ABC correction. But it's really the VIX that's starting to show you that fear is potentially peaking, at least temporarily, in the markets, right? Because this double top here could tell us that the VIX might be coming down to test this moving average. Not to say that this VIX won't spike later, right? And I'll get into my long-term view in a minute here. But really what I want to say is that the VIX is very high off of its moving average, right? Just like the DXY is very high off of its moving average. Now, that means in the short term, these assets are likely to move towards their moving average before potentially having a larger move to the upside. Now, the same thing applies on the inverse to the Dow Jones Industrial Average and also crypto, right? So Dow Jones is way below its moving average, right? In the short term, you could have another test of this moving average. Now, do I think that this is the final low in the stock market? I actually don't think it is. I don't. I actually think we're going to see another low before this bottoming process is complete. How do I think that low is going to take shape? Well, I think it's probably going to take shape after you get a major pump. You're going to get a major pump out of here. I think this is potentially a double bottom that's setting you up for a major pump to retest that moving average, which will set up further bullish divergence in the crypto market, right? Because if the stock market has a pump off that double bottom that it set up this past week, that obviously means that crypto will set up a pump. The divergence will be if crypto's pump is large enough to set up a higher low after the stock market falls. So what do I mean here? Just being so basic right here. Something like this, right? Stock market pumps up, crypto pumps up, sets up a higher low, right, in crypto. That's the divergence that I'm talking about. That's what I think could be setting up here. So basically, the divergence is at this low point for crypto, the stock market will actually be setting potentially a lower low. Why do I even think that's potentially the case? It's only because crypto is already showing bullish divergence against the stock market. Stock market keeps setting lower lows. Crypto does not, right? So that means that crypto is gaining strength against the stock market, and the stock market is gaining strength against the US dollar, right? So there's a lot of key divergences happening, and it really starts to show that crypto is gaining strength against all assets at this time. Now, that actually makes a lot of sense when you consider what happened with Ethereum back in September. You had the triple halving. You had the switch from proof of work to proof of stake. Like, Hello, that's very bullish. Very, very bullish. So if you're ever going to have a moment where crypto could at least in some part break from the general trend of the stock market, this might be that time, right? Because you have a fundamental bullish catalyst in crypto that you cannot forget about. Price action has not reflected this bullish catalyst yet. But of course, you have to know that it's going to at some point, whether that's this week, next month, next year. It's going to happen. If you reduce the supply of an asset while demand isn't reduced, well, then you're going to get a surge in price. That's what's setting up here in the crypto market. And the divergence of the crypto market from the stock market is showing you that crypto is definitely more bullish than the stock market is. And it's literally basic supply and demand. It's because the supply of one of the most important assets in the crypto market, Ethereum, is being reduced exponentially while demand is not being reduced. Now, demand for crypto isn't necessarily increasing on the retail investor side at this time, right? Because retail investors are scared out of their wits, right? But for developers, blockchain application developers, the demand for Ethereum hasn't changed. And I've talked about this before. If anything, the demand for Ethereum continues to rise steadily at the same time that the supply for Ethereum has now decreased significantly. That's what's going on with Ethereum, right? Like that's huge. Now, just because price isn't showing us that doesn't mean anything. Just like with Bitcoin back when it had its last halving, right? In May 2020, you didn't have an instant bullish response and you had just come off of a major, major low. So maybe Ethereum is coming into this area right here, right? You know, potentially, because you do have that bullish catalyst. So it's interesting to see the divergence. That's really what I want to point out here. Crypto is gaining a lot of strength. The DXY is losing a lot of strength at levels that we could have expected it would lose strength at. So this is interesting. This is very, very bullish. And back to the VIX, I'll point out that the reason I think that we're still going to see another low in the stock market is literally because the VIX hasn't actually spiked yet. It's now set up a nice double top setup here, which I think is going to send it down, and I think the DXY is going to go down with it, closer to the moving average. But ultimately, what we're looking for that ultimate bottom in the stock market is a spike in the VIX, something like we saw back here, something like that. That's really going to be your capitulation point. So what I'm saying is the VIX is not at that capitulation spike. I still think it's probably set up for downside. That downside is going to give stocks a nice little boost, potentially this week, maybe next week, who knows. And during that boost in the stock market, you're going to start to see crypto gain strength against the stock market. That's what I'm speculating, okay? So nothing's guaranteed, right? You can't fight the market. You can't fight the downtrend. Right now, Bitcoin remains in a downtrend, but it gains strength against other asset classes. So I'm optimistic. I'm definitely optimistic that a big move is coming. A big move is coming in crypto. Like I said last week, that move looks more and more bullish all the time because of the divergence, because of the relative strength against other asset classes. Crypto makes the most sense, really. Fundamentally speaking, crypto is definitely the best investment you can make at this point relative to the stock market. I mean, really, and I think I'm not the only one who sees that. So it's good, dude. It's pretty good.
Breaking away, oh wait, nah, I'm trying to state the phrase is amazing, and I only record when I play. The same mistakes pave the way to state the obvious ramifications of substantiated machinations of magnificent synchronization.